Well, it's been a long day. It's 12:18. Chipotle Mexican Grill. That's the time. 12:18 Pacific Standard Time. Today's date 7/10. Chipotle Mexican Grill is going to report earnings. MMTs July 19th. It'll be right after the July expiration. We're going to take a look here so that you'll have this here so you'll know how to load your alarms. These are the strike prices. We just put a couple in here on 7/16, but because it reports after this expiration, we have gone right down the chain of calls and puts, and we are going to put some scenarios together. And the reason why Chipotle Mexican Grill, as I did in the first video, the stock chart itself on the daily level is at 96.67%. There's little upside left in the name on a good report. Any upside will have to be sold short. So it's had a wonderful bull rally. It's outperformed all the indexes and most of its peers and everything else. There's nothing wrong with the company. There's nothing wrong with the great bull run that we have traded consistently. We've been trading this bull run, MMTs, all the way back over here in 2009 when Chipotle wasn't really talked of. It at one time was a $200 stock over here in 2008, but along in the financial crisis it came down. Having said that, this great company and great bull rally is going to have to come to an end. The reason why I say that is because if you look at the daily, when we got oversold, we were oversold, but now look at where we're at. We're overbought. This is that long cycle. One thing about trading earnings is, when do you know when to sell the news? When do you know how overbought you are? And how we will be putting this together. Okay? So basically, I'm going to move the daily chart out of the way. We already know what that's about. We don't need to look at that no more. What we are going to take a look at is that $300 call that is about $25 in the money. This call is extremely inflated, and it will go down in value, MMT. $33 was the high on 7/2011. Because it's so inflated that they will come down, is that the high was 31.90 here on Friday, and they just kept buying them again and kept buying them again. Look, the problem is on the monthly chart, you're so overbought on all of them that now I'm going to show the opposite over here. I'm going to show below the market, August 11th. Now, this was the bottom over here. That contract was a great place to be at $5 to $33 right here, $33.30. Over here, we were inflated, and these contracts opened. The high was $37.10, and they have brought these things right down here to the low of $5.45. Kind of about where the same place was when the puts went straight down in value on this daily chart, all the way to that low. These are deflated, and they're deflated. So when we look at Chipotle Mexican Grill, we look at this side of the market, because as we trade up till July, we're going to have a lot of volatility on Monday, tomorrow morning. We got other bellwethers. This one doesn't report until a week from tomorrow. It'll be a week from tomorrow, July 11th, Monday. So we're going to go through the options, monthly options expiration, and we're going to look at how to put this Chipotle Mexican Grill on. We're going to see how Chipotle Mexican Grill continues to stay in its overbought zones where we can get some entries below the market. That's the $300 put versus a $300 call. So you can see that you're inflated and deflated. There's going to be a change. They're not staying up here. Yes, you can stay inflated for a period of time, for a small period of time, that is, but when you get into the earnings, anything that Chipotle Mexican Grill could have delivered or even blow out a quarter or even give upside guidance is reflected in the current stock price. Exuberance is running at its very finest. Irrational exuberance. A lot of people won't know when to sell. They get greedier and greedier and greedier. And when that greed level gets to a certain high, there's going to be a change in the put to calls. All right, $300 call, $300 put. Now, on the flip side of all of that, we would be taking a look at another contract. We just wanted to cover the July expiration here, and that's a 330 put right here. And its low was 509. And now we made a high here, $9.90, almost 100% premium because it's very deflated. We would look at this during Monday, July 11th and the closing bell of Friday. This is very deflated, so we're very overbought. We could trade these short term, intraday on the 330 put, and we could make good money. The 310 strike price that expires this coming Friday, the monthly option expiration, is down here at 61 cents on the low, and then they made a high of $1.35. They are definitely tradable short term. Chipotle Mexican Grill, though, is up at the high end of its overbought process. 329 was a high. I think we closed somewhere around the 325 handle. The thing about it is, if it dropped $15, these could actually go up in value, but we'll monitor these. This is not the August contract. It's a tradable contract, but it's not the one that we would hold. But it's tradable. It's so deflated. You can see that the put side, I mean, look, these were $40 a contract. Hey, there's 61 cents down here. I've got very little risk. Depending on how the name is going to trade, depending on its intraday trading ranges, we'll make decisions at that time. I'm going to show you the 260 call in the money. When Chipotle Mexican Grill made a $90 breakout from its bottoms and higher, that this was at $25 a contract. They were still inflated at the price, but they made a high here of 68.30. That is deep in the money call. Now, when you get over here and you take a look here at the same strike price, the $260 put below the market, does it ever have to go to $260 to make money on this premium? Absolutely not. We've already traded and showed that examples like in Google. They're down here at $1.15. They were only $12 on the high, but they've taken them down to the deflated area here of $1.20. Now, Chipotle Mexican Grill, and it's an August contract, and it's well below the market. I mean, this thing is like $65 below the market or so. This is the side of the deflated transaction MMTs that we look at buying because our capital risk exposure to the overbought process, to the pullback, give us a yield. If they come out on their earnings and if they don't do as well as the street anticipated, everyone is going to run for the exit, the big money, and start taking profits on Chipotle Mexican Grill. The lesson to learn, though, is that this market here has already made all-time highs in the calls. When this thing here, when people were buying these $260 calls, they're way up here at $68 a contract, and these are down here at $1. We will be trading those. Here we are. This is a $250 put on Chipotle Mexican Grill, $75 out of the money, meaning that Chipotle Mexican Grill is trading about $75 above the market, and that this here has made an all-time low of 80 cents. Does it have to go down to the price to make money, MMTs? Absolutely not. It's a premium trade for a profit. So if we get where we were to drop, let's say, down toward the 300 handle over the next month, and we're extremely overbought and we're due for a pullback, the earnings will probably be good. They've executed well in them. However, it's too overbought going into those earnings. These can be traded for a premium. The last high, and they're not going to give a big, super yield, but they're bought down here cheaper. And I just wanted to put that $250 put. And it's a month long from now. And we're overbought. These are oversold. These are totally deflated. Another strike price that we have is a 290 call. Why we look at it? Why are you trained that way? Because over here, the low was 810. The high, this inflated high, is $40 a contract that was set. They closed at 38.20, so we're fairly inflated up here. So we would be looking at how inflated this is versus that this one here was as high as $26. My point of it is the lows were put in here in this deflated pocket at $3.64. They haven't moved a lot. It's a 290 put. If Chipotle Mexican Grill doesn't, let's say they guided the quarter down, well then, look, what I can say is going into the earnings that these are inflated. They're not going to go much higher. And they're not staying up here. This is not going to stay down here either. So depending on how they report, we could look at the 290 put. We know where the 290 call has ran its course, and we know where this has ran its course. So we would look at taking a small position here. We would use the monthly Monday through Friday starting July 11th to the actual 16th, the end of the 5-day trading range. Somewhere in there, we would look at where we have to transact it. Because the equity name is so overbought on the charts, you already know how overbought the daily is. I mean, my crying out loud. The thing is at 96%. Sorry. See ya, wouldn't want to be ya. This is where I want to be. This is where selling at the inflated highs and buying here at the deflated puts on Chipotle Mexican Grill. Reports earnings July 19th. The success between inflated and deflated. The success of buying the rumor and selling the news and selling the gaps. Any gap up because we're so overbought, those intraday high gaps will be sold short and you will have your trade then.